Welcome back to Alpha Insights. I'm Kristen. Today we're diving into materials and mining, rare earths, nickel, and some geopolitical wrinkles that investors should know about. Joining me is Matt, our markets expert. Hey Matt, great to have you.
Thanks, Kristen. Good to be here. Excited to unpack some of the moves that came through today.
Quick note for listeners. If you have questions as we go, you can ask us at stockalpha.ai. We answer listener questions live, so jump in.
Perfect. So, where should we start? There was a big headline result that really got traders' attention.
Yeah, that's a good point. Let's talk about that discovery first.
Appia Rare Earths reported a really thick, high-grade intercept, 300 meters at about 2.5% total rare earth oxides, and it starts from surface. They drilled 26 holes, roughly 7,347 meters in total, and they've announced assays from 12 of those holes so far.
For listeners who don't dig into geology every day, what makes that result meaningful?
Two things matter here. One, the intercept is very thick, 300 meters, and it's near surface. That reduces stripping and mining complexity. Two, the grade, about 2.5% TRIO, which stands for Total Rare Earth Oxides, is compelling for a carbonatite-hosted system because those deposits can scale into large, economically viable resources. So combined, thickness plus proximity to surface is what got investors excited.
So the market reaction is because this could feed things like electric vehicle motors and magnets, right?
Exactly. Rare earths are central to permanent magnets used in EV motors, wind turbines, and even certain defense technologies. A discovery like this, if it converts into a formal resource and development plan, can reshape supply expectations for those supply chains.
Interesting. But discoveries are one thing. What about the broader supply picture?
Good question. There are some strong supply-side dynamics happening elsewhere. Indonesia, for example, is expecting new nickel smelter capacity to come online in 2026 after a wave of foreign investment, largely led by Chinese firms. That can push nickel availability up, which is important for battery makers and stainless steel producers.
Right. And Australia?
Australia is planning project ramp-ups and capacity expansions that are forecast to increase coal output next year. Thermal coal still makes up more than 60% of national coal production, so traditional commodities are still very much part of the earnings story for miners down under.
Okay, so there's momentum, but you mentioned geopolitical issues too. Tell me about that.
Zimbabwe announced an indefinite freeze on critical minerals exports, which affects platinum group metals and other strategic metals mined along the Great Dyke. That kind of policy move injects sovereign risk. It raises the risk premium on projects tied to the country and can complicate offtake deals. How broad the impact is depends on how long the freeze lasts and whether buyers can switch suppliers.
So that could push some prices up if supply tightens?
Potentially, yes. But price moves depend on duration and how quick buyers are to reroute supply. If the freeze is short or selective, markets might shrug. If it drags on, expect localized tightening and higher volatility for affected metals.
I mean, when you look at the data, there are also corporate and tech moves in the sector today, right?
Yeah, Caterpillar rolled out a redesigned rental management experience that ties in telematics. That matters for fleet utilization and margins. Structal showed additives aimed at improving recycled plastics, which is part of the circular economy story. And Olympic Steel completed a merger with Ryerson to become the second largest North American metals service center operator. That's consolidation that can drive scale and efficiency.
Honestly, I was a bit surprised by how many threads are moving at once.
Me too. There are exploration wins, capacity builds, corporate consolidation, and policy shocks. All of it matters to different types of investors.
So, Matt, what should listeners actually watch next? What are the catalysts?
Watch for further assay releases from Appia and any timetable for a formal resource estimate. That's the obvious one. Track details on Zimbabwe's export freeze, duration, enforcement, and whether there are exemptions. Follow commissioning schedules in Indonesia for nickel smelters. Delays there will change price dynamics. And keep an eye on operational updates and shipping data from Australian coal projects, plus integration milestones for Olympic Steel and Ryerson, and adoption metrics for Caterpillar's platform.
Great checklist. For listeners trying to position portfolios, what practical advice do you have?
Decide first if you want exploration upside or steady cash flow. Juniors and explorers can deliver big re-ratings on discoveries, but they carry more execution and resource risk. Larger producers offer scale, steady cash, and usually dividends. A mix can work. Small allocation to discovery plays, core exposure to established producers, and watch your exposure to jurisdictions with elevated policy risk.
Right, balance risk and upside.
Exactly. And stay active on monitoring. When policy or capacity changes happen fast, you want to be able to adjust quickly.
All right, before we go, can you sum up the main takeaways for listeners?
Sure. 1. Appia's thick, near-surface rare earth intercept is a meaningful early-stage result that could shift supply expectations if it converts to a formal resource. 2. Indonesia's smelter build-out and Australia's ramp-ups are likely to add supply and scale, which can temper price spikes but support long-term industry growth. 3. Zimbabwe's export freeze is a reminder that geopolitical risk can move prices and project economics quickly, so monitor exposure closely.
Perfect. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks for joining, Matt.
Thanks, Kristen. Talk soon.